Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news of a quiet end of July as the Northern Hemisphere holidays in the heat, and some tame second-tier data. And China chipped in with an underwhelming announcement of how they will deal with their slowdown. First, although it improved in July from June, the Chicago PMI that measures activity in the key Midwest manufacturing remains solidly negative. Also signs of improvement in the Dallas Fed's July factory survey, even if it stayed negative as well. But it is the Midwest one that needs to move up more to indicate a better outlook. However, we are seeing good recovery in Japanese consumer sentiment. It is a long way to go to get back to pre-pandemic levels, but it is rising quickly now. Meanwhile, the Bank of Japan ran an unscheduled bond auction yesterday in a bid to stop yields rising too fast. And China's official factory PMI survey contracted the least in July for the past 4 months. But their official services PMI fell to its weakest level of the year, now with only a tame expansion. Yesterday's big stimulus announcement in Beijing turned out to be a damp squib, with almost all of it a restatement of previous piecemeal initiatives. But it did show that Beijing is keeping a wary eye on the situation, and it still has its big set-piece direct stimulus options up its sleeve. Beijing wants people to consume more, including buying more cars and investing in property, but also wants people to take more holidays, and it is calling for more private sector investment. But to outsiders, it looks like policymakers are just too confident that party exhortations will work. China's property crisis, which has been going on for more than 2 years now with waves of defaults, is entering a new phase. State-backed developers are now having trouble making bond payments and repaying debt. It's a big deal, with more than $575 billion in maturing bonds potentially triggering new stresses. Singapore's business confidence is now back in positive territory and its best level of the year. In Australia, there is some evidence that their rising official interest rates are keeping a lid on property prices there. The US Treasury 10-year yield will start today at 3.96% and unchanged from yesterday, and the price of gold will start today at $1,971 an ounce, up $12 from yesterday. And oil prices are up another 50 US cents, just on $81 a barrel in the US, while the international Brent price is just over $85 a barrel. And the Kiwi dollar starts today up more than 0.5%, at just on 62.2 US cents, but still in its recent range. Against the Aussie, we're marginally softer at 92.5 Australian cents. Against the euro, we're 0.5% higher at 56.5 euro cents. That all means our trade weighted index has risen 50 basis points to 70.2. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.